Hello, everyone, and welcome back to a new episode of Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up. Alrighty, y'all. So tonight, let me just make sure I am. Sometimes the Facebook be acting up a little bit, so I just want to make sure that we are live on all the platforms. Okay. All right, let's just do that. Okay. So, hello, everyone. Hello. And welcome back to another episode of Sipping Wealth Live. Like I said, where I bring you news, tips, and tricks on how to wealth up. And that's every Tuesday at 6 p.m. So today I will be talking about term versus permanent life insurance. So there are only two types of life insurance, and I'm going to be really dissecting them and going over them today. There's a lot of information and really a lot of misconceptions surrounding life insurance. So I did want to make sure that I spend some time on this topic. So over the next few weeks, we are going to go in heavy on life insurance, is understanding it, have a better understanding of life insurance so that you can make more educated decisions on it. So this time around, you will be seeing my eyes diverting a little bit more because I am live on Instagram as well as YouTube, Facebook, and LinkedIn. So just trying to make sure I navigate all the platforms here with you all. But like I said, thank you for joining me. For those that are joined, please drop a comment in the comment section. Say hey to your girl so I know who's streaming live who's with me. And then if y'all do have questions while I'm live, feel free to drop a comment in the comment section as well, other than your hey girl, what's up? All right, so let's get it popping. Don't forget to share and subscribe to the YouTube channel Sipping Wealth. But like I said, let's go ahead and hop into the topic. All right. So for starters, there are, like I said, only two types of life insurance. So, and that's going to be term or your permanent life insurance. And then everything else trickles from there. There's only two. So that's as simple as you can do it. Get it down to. So the first bucket is your term insurance. Under your term insurance is generally for a specific period of time. So it's either 10 years, 20 years, 30 years, ultimately, and those are the most common years, 10, 20, or 30. But it do expire after that time period. So after 10 years or after 20 years, you no longer have that policy. You either have to renew or you have to find another way of being insured, or you just let go of the insurance altogether. But ultimately, the insurance does expire after that time period. But it just lasts for that time period. That's for term insurance. Also, with you have your term insurance is generally a lower premium. So whenever somebody's like, "Oh, I have life insurance, I pay $50 a month, or I pay $60 a month," ultimately in my head, I'm like, "Okay, they have term insurance," because generally your term policy, the premium for your terms are going to be a lower amount. So it's going to be more on the affordable side, especially for younger individuals. So I remember back when I got my first term policy when I was in college, around 2016, I got my policy. And I went and I got it. I'm like, oh, okay, what do I have to pay? And then it's like, oh, $25 a month. And I was like, oh, I'm doing something. So like I said, generally for younger folk, your term policy is going to be smaller. Starting as soon as possible is ideal. And then if you're like, oh, I don't have the budget for a fixed policy right now, term is generally your go-to. All right. Ooh, okay. Oh my gosh, this is too large on my screen. I have to be able to see. Okay. All right, there we go. There we go. I want to make sure I can see the comment section. Okay. All right. And then we have also with your term is generally the purposes that why you should, why they generally, or people generally go for a term policy is for like paying off your mortgage. There is particular like term policy specifically for like declining term policies that actually go towards paying off your mortgage. So, and even some loans, they do require you to even have this particular policy so that if anything were to happen to you, it's going to pay the bank their money on the loan, if anything were to happen to you. So, or if you're like, hey, I want to make sure my family don't have to make, pay the home if something happens to me, then getting a term policy, a declining term policy may make sense, so that, hey, as you age or as you continue to pay off the home, it's cheap, it goes cheaper. But also as you uh if you still have that debt, then you're still going to hold on to that term policy. It looks like I have a question. All right. So I need a term policy. So not necessarily. I'm gonna go over permanent insurance as well, but I just wanted to make sure I hone in on term policies. If you find that, hey, with this information, you need to get a term policy, then hey, that may be the go-to. Like I said, it tends to be more affordable. It's if you do have a mortgage that you want to make sure that it's paid off, the term policy ideally does that. If maybe even for children education purposes, child education purposes, or to pay off certain debts, term tends to be the go-to. There is no cash value when it comes to term. He said, which is better, the declining term policy? So the declining term policy is just a particular type of policy for, say, a mortgage or a particular debt. So you don't want to have to pay the same amount. Say, when you first got the term policy, you owed $200,000 on the home. You don't, as you continue to pay off the home, you don't want to continue to pay a premium for 200 grand, because you don't owe that much on the property anymore. So as you continue to pay it down, the premium for the declining term policy goes down as well. So that's where the declining term policy comes into hand. Generally, when you're trying to pay off a particular loan. Now, if you're trying to use it for protection for maybe life, or maybe children, things like that, then it's just going to be, your regular term policy, and that's going to be 10, 20, or 30 years. Now, there is certain features that you can add along with your term policies, like convertibility features, things like that. But generally, your term policy is just for a short period of time. But it is more affordable. That's the thing. Some term policies offer the renewal option, and then so if it does expire, you do have the option to renew it at an increased amount, depending on what your age is when it expires. But generally, a lot of, well, I know, for example, like National Life Group and other insurance carriers, they do have a convertibility feature where, hey, their term policies have the option of being converted into a permanent life insurance, a permanent product. So, so hey, as you continue to hold this term policy, you can convert pieces of it, into a permanent life insurance policy. Now, generally, term policies tend to have that a capability, but a lot of times it's a rider that goes along with the policy. So that's term. All right. So permanent life insurance is going to be for your, permanent, for the duration of your life. All right. So the premiums on permanent life insurance is higher compared to term insurance. And that's because it's fixed over the entire length of the policy. So it's going to take into account, you getting older over time, because the cost to insure you, say if you're 30 years old, and the cost to insure you at 30 versus the cost to insure you at 50 is going to go up, but your premium doesn't go up. How much you're paying for that policy does not go up. So because it doesn't go up and they lock you in, they want to make sure that, hey, the amount that we lock her in at is going to take into account how much is going to going to cost to keep insuring her throughout the entire time of her life. So that's why permanent life insurance is more money because you're locked in. And that's the other perk of having permanent life insurance is because you're locked in, you don't have to reapply for insurance if something happens to you. And then generally your health declines over time. And also the insurance, the cost of insurance goes up as you age as well. So being able to lock a particular insurance rate at a smaller amount tends to be, the benefit of having whole life versus term, even though term insurance is cheaper. Okay, I'll definitely be contacting you for more info so I can get my family insured. Thank you for fully explaining. Yeah, no worries, girl. Gotcha. Um, so the other perk of permanent life, and generally, I recommend having both. So I have both because one term is cheap. It's cheap policy. Permanent life is great because it's locked in. So, but I like the idea of having both term and permanent insurance because term is so cheap and you get a larger death benefit on term for a lower amount versus permanent. It's like, okay, yes, you're locked in, but it's more on the pricier side. So another thing with permanent insurance is cash value. So generally with your permanent life insurance policies, they accumulate cash value over time, which means you can borrow this money. Generally, you can borrow this money so you can use it for other financial purposes. So if you need to borrow money against your life insurance policy, that tends to be the an option for you when you have permanent life insurance versus your term insurance, because it's locked in. So cash value at term, I mean with permanent is a perk, and then investment components. So some permanent policies can include like an investment part of it essentially because that's where you are building the cash value because the policy is essentially being invested so that it can grow and have some cash value. So because your permanent life insurance is being invested, they're like, hey, we're going to give you some money out of it, and that's where your cash value comes from. All right. So and that's another advantage of permanent. So, hey, it does have the investment component. Depending on if you have variable, and I should probably go over the types of permanent insurance. You have whole life, universal life, variable life insurance. So those are different permanent life insurances that they have different levels of investments and flexibility with each of those type of permanent life insurance policies. So where a whole life policy, you don't have as much as investment component versus a universal life, you have more of an investment component, and then you get larger with your variable life. All right, but ultimately your permanent life insurance is going to have an investment component that's going to grow and build cash value for you. All right. So I'm gonna go over some tips. So that's the general overview of term versus permanent life insurance. All right. I'm gonna go over some tips and things that you want to keep in mind as you go through and start making your decisions. If you do need to sit down with a financial advisor and like that, feel free to reach out. I do have an amazing team that I'm with, as well as myself. Like I said, I am licensed. So reach out so that we can get you situated. But I want to make sure that I go over these tips so that you can keep in mind as you move forward to make with making these financial decisions. All right. So the first is to make sure that you're assessing your needs. So that is literally the starting ground. When you say, "Hey, I need life insurance." Well, how much do you need? That's what we need to figure out. All right. So we need to consider why you need life insurance first, and then how much life insurance do you need? Do you need it for the entire duration of your life? Are you using it to cover a mortgage? Are you using it for your child's education? Are you using it for savings? Are you using it so we need to determine, okay, what are you using it for? And then we're going to determine, okay, how much do you need from there? All right. Why do you need life insurance first? All right. Why do you need it? Why do you want it? What are your goals? Okay. So once you identify, okay, hey, my goal is I want to make sure if anything happens to me, my there is a death benefit that's going to go to my family. Or I want to make sure that my child's education is covered. Or I want to make sure that I'm saving some money, like, and also have a death benefit. Like, can I have some savings in there? So depending on what you want, we got to determine what you want. So that's first step. The next is now budget. Now you got to consider your budget, okay, and how much money you actually have available to actually meet this need. So if maybe you did the calculations and you're like, oh shoot, I need a $2 million policy. Well, right now I can only afford, 250K of permanent insurance. But with that 250K permanent insurance, I can afford $1 million term insurance. So maybe I have to do term plus permanent so that I can get to that 1.5, or so that I can get to that $2 million marker. And then eventually I can convert some of that $2 million into something permanent. All right. Now that can be an option for you, right? So you don't want to say, oh my gosh, I can't afford life insurance. Oh, I'm going to close my eyes to it and that's it. Right? There's options. Okay. There's you can mix and mingle. That's why I say you want to sit down with somebody to determine, hey, what is your budget? What can you do? And go from there. All right. So next, so determine your budget. How much money do you have? Like I said, your term insurance is going to be on the more affordable side. It's going to help if you need like a substantial amount of coverage and you're on a budget, tighter budget. And then your permanent insurance is going to be more expensive, but it does offer a lot more growth and coverage over the course of your life. All right. So, like I said, maybe you need to do both so that you could get some permanent insurance on the books, but also so you can make sure that you have substantial coverage if anything were to happen to you. So until your budget allows you to convert more of that term insurance into something permanent. All right. The next is your duration of coverage. So how long do I need to be covered for? Like, do I need to make sure that, hey, I have coverage for the entire, the rest of my life? Because I don't know what my health is going to look like, or maybe you even have health concerns right now. Maybe you need to look at permanent insurance. Or maybe you're like, hey, I need a good 20-year, or I need a good 10 years. And then after 10 years, we're going to figure something out there. Hey, we needed to figure out how long your duration of coverage. How long do you need this life insurance for? All right. The next is cash value benefits. Take into account cash value. So, like I said before, cash value is going to come out of your permanent life insurance policy. All right. So, that's either your whole life, your universal life, your variable life, those type of policies. All right. Hey, if you're like, hey, I want to make sure there's a savings component. I want to make sure that my money is growing, under, or like with my life insurance policy. If that's something that's important to you, and that you're like, hey, I want to make sure that, my money's growing in that avenue, then cash value benefits, permanent life insurance is something that you want to look towards. All right. Term does not offer the cash value benefit. All right. The next is flexibility and premiums. So, flexibility and premiums is going to come from your universal life policy, all right, which is a type of permanent policy. All right. So, flexibility and premiums allows for you to essentially be flexible with the amount that you're paying in premiums, as well as the amount of death benefit. Okay. So this is a good option if you're expecting your financial situation to change over time, and you have somewhat of a budget now to really work with the universal life contract, but you will expect some more changes over time, some more growth and things like that over time. So maybe you want to look at a universal life policy. All right. The next thing to consider is converting a term policy into permanent. And I mentioned this a couple of times throughout the live. So, you do a lot of term policies like with National Life Group and a lot of other carriers do have an automatic convertibility feature, but some policies require you to add the rider onto there. So if your term policy, if you're like, hey, I want to convert, maybe you took out, I mean, you have a term policy for 500K and you're like, hey, I can afford to move 200,000 of that 500K into something permanent. I'm willing to take out an additional premium to move 200,000 of that 500,000 term into something a permanent contract. So, generally a lot, like when it has the convertibility feature, you can do this movement without having to requalify it, without having to do a medical examination. So that's another reason why having the convertibility feature within your term is just such a great idea, because hey, you don't have to go back to you don't have to do your blood work and all that again so that you can convert that term policy into something permanent. All right. So this can be beneficial if your needs change and you want lifetime coverage and you already have that term policy. All right. The next is the impact of age. So consider the impact of age. As you get older, the cost of your premium is going to get higher as well. And that's across the board, whether you have term or permanent life insurance. Now, with permanent life insurance, you're not going to see your premium change. But on the insurance side, they're watching, the numbers are changing on the back end. So it's going to look different as far as the amount of cash value in your policy. If you take out a loan on your policy and you don't have enough cash value to sustain the increase in age, it can start hurting your death benefit. So that's why you have stories where, Uncle Ray Ray died and he had a $2 million policy, but he took out a loan on the policy and now his policy is worth 200K. Well, he took out a loan and then on top of it, he had penalties. He had also the cost of keeping him insured was also increasing over time, which also ate at the death benefit. So different factors like that. So consider the impact of age, even with taking out a loan on your policy and things like that. All right. Policy loans and withdrawals. You do have that option when it comes to permanent life insurance. If you do need to take out a loan or a withdrawal on your policy, and generally these loans are at a lesser interest rate than you going to like a bank or something. So, where a bank may charge you a 10% rate, maybe your life insurance policy is going to charge you 7%. So this is going to be also a perk or a play that you can use in the future if there's a financial emergency or maybe a useful financial strategy that you can deploy to wealth up. All right. The next is renewal. And I talked about the conversion. I talked about that essentially. Well, the last one I want to go over is taxes, right? Ooh. So there is tax benefits when it comes to the cash value within your permanent life insurance. All right. So the cash value in your permanent life insurance grows tax deferred, meaning you won't pay taxes on the growth unless you withdraw it. Meaning, hey, you start pulling money out of your life insurance contract versus it being paid out to your beneficiaries. All right. So generally, the death benefits that are paid to your beneficiaries are tax free. Now, if you start pulling cash value out of your life insurance contract and never paying it back, that's when you start, getting into some taxation. But generally, your cash value in your permanent life insurance contracts are growing tax deferred. So that's a perk of another perk of having some permanent life insurance as well. All right, so that is all my tips. Hopefully, this is helpful. This is one of the exciting lives that I really enjoyed. So, if you're just hopping in on the end, make sure that you go back and watch this, share this live. There's a lot of useful information in here. I mean, this is heavy. This is something that affects everyone, whether you are a business owner, person, or not. You know, so make sure that you take a look at this live, understanding the difference between permanent and term life insurance and the different benefits of having it is crucial, and it's an important strategy as you continue to go on your wealth journey and build your your financial house. All right, y'all. So that is it. Thank you all for joining me for this episode of Sipping Wealth Live. Be sure to continue to subscribe and tune in every week, every Tuesday at 6 p.m., where I bring you news, tips, and tricks and how to wealth up. And I will see y'all next week for another episode. Have a wonderful, amazing rest of your Tuesday.